Xavier Smith, one stock you like at the Center Global Select Equity Fund is Volkswagen. It's been a tough year for Volkswagen. Stocks down around 40% because of the emissions scandal. So what makes you think it's going to turn around in 2016?
We like Volkswagen a lot. We think investors have paid too much attention to the diesel emission scandal. If you look at the sales figures that occurred in October, the scandal occurred in September, but in October, Volkswagen sales in the US were actually flat, so it wasn't as bad as some people were expecting. If you look in November, the other brands such as Audi and Porsche, which are actually more important to the Volkswagen profit story, still growing in double digits. So it looks like their sales haven't taken a hit that some investors were expecting. So we think that Volkswagen has been oversold this year.
All right, and you're also bullish on Unilever. Stock's had a pretty good year. It's up around 6% in 2015. Pays a nice 3% yield. Tell me why you like it.
We like Unilever for a couple of reasons. One reason is we think investors are paying a little too much attention to their emerging markets exposure. The firm has over 50% of their sales in the emerging markets, and investors are concerned that their emerging markets currencies will have a negative effect on profits for next year and beyond. What we think is that investors are not taking into account the firm's ability to raise pricing. And if you look at Unilever's track record in price hikes, they've been able to offset currency losses historically. So we think that's a good trend. The other thing we like about the company is that they're doing really well in terms of their portfolio management. They're shifting out of low margin and low growing food, and they're shifting more into the faster growing personal care sector. So we think this will be good for return on capital.
All right, and you also like NT&T over in Japan. This is their telecom. It's their big telecom. It's had a great year. It's up over 40%. So tell me why you like this one, because this is not really a yen story, because this is a domestic company.
It's not a yen story. This is also another portfolio transformation story. You know, historically it's been seen as the staid, boring telecom company, but going forward they've shifted more of their business into broadband and into mobile telephony. So if you look at the historical landline business, it now only represents 20% of sales. So most of the business comes from a faster growing end market. We also like the fact that they're growing faster than their competitors. So in mobile and in broadband, they're growing faster than KDDI and faster than SoftBank. So that's positive as well. And then finally, they have a double-digit free cash flow yield. So that's always favorable.
And then finally, a stock that certainly is not boring is NETI. This is a Chinese online giant. Stock's up 70% this year. Should you expect another 70% in 2016, or is that asking too much?
I think 70% is a bit much, maybe 20 to 30%. We like NETI. This is a Chinese internet software company. Historically, it's been seen as a stodgy, boring company. It's an online web portal, similar to the way people view Yahoo in the United States. But what we liked is the firm has pivoted into the online gaming sector, and they've had a lot of success here. In this segment, they have 2 games that are in Apple's App Store that are in the top 10 list. So they've achieved a lot of success there. And then also, they've made it where the online game sector has reached 20% of sales. So we like that. We also think that the firm has a strong balance sheet. It's in a net cash position. So they've been buying back shares. So we think that's quite favorable as well.
All right. Well, thanks a lot, Xavier.
Thank you.
Thank you for watching The Street.